Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of January 1 to January 5, 2024. Let's dive into what to expect in the upcoming week. As 2023 comes to a close, global currency markets face a series of challenges. The US dollar appears set to end the year with losses against major currencies despite strong economic data. The Canadian and Australian dollars also experience their own ups and downs, while the euro, supported by the ECB's hawkish policies, is expected to hold a middle position in the FX league. The uncertainties of the global economy in 2024 will continue to impact currency markets, especially in terms of interest rate decisions and economic growth. 2023 saw the US dollar on a volatile path, influenced by strong economic data and labor market performance. This trend often countered expectations of a Federal Reserve policy shift. Despite a mid-year rally, the dollar is projected to end the year with a 3% loss against major currencies. With the Fed hinting at a potential policy change, market anticipation for significant rate cuts in 2024 is growing. Even though the US economy isn't in recession and only modest rate reductions are expected by Fed officials. The upcoming US jobs report is expected to offer a balanced view, reflecting the Federal Reserve's increased focus on employment as inflation eases. Policymakers are closely watching the labor market, with Fed Chair Powell indicating a potential shift towards easing policies to prevent rising unemployment. Despite a slowdown in job growth, the labor market remains stable with moderate wage increases. December's non-farm payrolls are projected to grow by 150K, with a slight increase in the unemployment rate to 3.8% and stable average earnings growth. Investors are keenly watching the U.S. jobs report, with strong expectations for the Fed to initiate rate cuts. The market's reaction to the report might be muted unless there's an unexpectedly high jobs growth, which could trigger a dollar surge and a Wall Street sell-off as rate cut bets are reassessed. If the jobs data doesn't provide clear direction, focus may shift to other key economic releases, such as the ISM-PMI JOLTS job openings, challenger layoffs, and factory orders throughout the week. As 2023 wraps up, the Canadian dollar and Australian dollar face distinct economic challenges. The loonie, benefiting from Canada's less direct exposure to China and the Bank of Canada's hawkish stance, outperformed its Australian and New Zealand counterparts. However, stagnating Canadian economic growth and potential Bank of Canada rate cuts in 2024 pose risks. Upcoming Canadian labor market data and wage growth figures will be pivotal. For the Aussie, China's manufacturing PMI data could significantly impact risk sentiment and equity markets. The euro is expected to finish in the middle of the FX league table for 2023, supported by a more hawkish European Central Bank ECB than anticipated. However, a weaker Eurozone economy in 2024 may lead to the ECB cutting rates more than the Fed. Despite falling U.S. yields, the euro has benefited from rate cut speculations. Upcoming Eurozone inflation data, particularly the December flash CPI readings, will be critical. While headline CPI is forecasted to rise, core measures excluding volatile elements are expected to show a decline, reaffirming the ECB's cautious approach towards policy pivoting. The global currency markets in 2023 have shown varied dynamics, from the volatility of the US dollar to the challenges for the Canadian and Australian dollars and the stable performance of the euro. With shifts in central bank policies and slowing economic growth, 2024 may bring more uncertainties. Investors need to closely monitor economic data and central bank actions to adapt to this ever-changing financial environment. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.